Hello, this is Chuck Carnevale, co-founder of FastGraphs. This video is produced in response to a subscriber question regarding how do you use FastGraphs to evaluate MLPs in general, but more specifically, the subscriber was asking about VNR. Vanguard Natural Resources is an MLP operating in the oil and gas exploration and production industry. And one problem with looking at MLPs, when you look at it from operating earnings point of view, very similar to real estate investment trusts, there really isn't a strong correlation between the company's stock price and its operating earnings. There's another line on this graph that we typically draw on a regular graph, which is the normal PE ratio. And although this is a mathematically correct iteration of Vanguard Natural Resources PE ratio, it really doesn't make any sense, because here we see the price was way above the normal PE, and at that point it had, very, very high price earnings ratios during these periods. And then there were periods when the price earnings ratio was virtually zero, when the company didn't have any earnings here. So we really don't get any way to really assess fair valuation here. Also, we see a kind of a distorted picture of dividends, which I'll explain in a moment. So what we really needed was we needed a better way to evaluate REITs and MLPs. So what we did at FastGraphs was we looked at funds from operations, and we created a funds from operations option so that when you're valuing businesses, you can use either operating basic diluted for regular C corporations, and we always default and prefer using operating earnings because we feel that's the best earnings and price correlation with normal companies. But for MLPs and REITs, we developed this funds from operations metric because that's a good measurement of how to really measure an MLP or a REIT, as I'll illustrate here in a moment. But there's another opportunity that we had when we were looking at these kinds of graphs. When we were coming to MLPs and REITs prior to utilizing this funds from operations option, what we asked the client to do, or the subscriber to do, was uncheck the valuation line, or the orange line, because it really didn't have any meaning. Unclick the normal PE ratio line, again, because although it was mathematically correct, it was really kind of a misleading mnemonic. And let's look at the company from the perspective of price and dividends only. But before I do that, I'm going to switch to a different MLP here that has a very straightforward graph, because rather than try to explain how this works looking at an exception, and you'll see in a moment that VNR is an exception, let's look at what I would call to be a quintessential example of the price and dividends relationship between an MLP. So here, looking at Kinder Morgan, when I look at it from dividends only, you can see that there's a very strong correlation between this company's stock price and its dividend. When the dividend was materially above, when the price was materially above the dividend line, it soon recovers. And then during periods where it's below the dividend line, it soon recovers. And here it got above the dividend line and then came back, and now it's over it again. And my argument would be that it's probably moderately overvalued based on what the dividend here is showing us. So this is a simple iteration of, because since MLPs, very similar to REITs, are primarily valued based on their distributions more than their profitability, it makes more sense to look at income only. So we added a couple of things. First of all, we added the funds from operations that I mentioned to you earlier. So I'm going to check that box now. But then we added a pink line, which is the income valuation line. And what I'm going to show you here is, by redrawing this chart, I'm adding that pink line because I want you to see what the pink line represents. The pink line that you'll see here in a moment is simply this line that represents dividends only correlated to stock price. The problem is, when you have to remember that the dividends come out of either earnings or, in the case of MLPs, funds from operations. So when I put the whole graph together, when I go ahead and click the box here that says the valuation line, that's going to put the orange funds from operations line, and then the normal price to funds from operations. And notice this has changed from PE to price to funds from operations line. When I draw a traditional fast graph utilizing all of its parts, I get a picture that allows me to look at valuation from several different levels. I can look at it from the standpoint of funds from operations. Now, notice on this graph that funds from operations and price really don't correlate very much. There was a pretty good correlation up to 01, but since 2001, price has been below the funds from operations calculation of fair value, which again is just a barometer. It's a metaphor evaluation. So in this case, the 9.5 normal price to funds from operations becomes a much more correlated, and therefore I would argue realistic, measurement of fair valuation. And on that basis, we see that in this case, Kinder Morgan would be moderately undervalued. looking at that pink line. Now, the reason the pink line looks like it's down here and dividends are up here now, because we're including both all the company's cash flows plus the cash flows that are paid out. So this iteration is as if we drew this pink line on top of the gray area like we did when we took the lines apart. It just allows us to see it without having to take the graph apart. So here we look at a stock, MLP, that might be moderately overvalued based on income, moderately undervalued based on a normal price to funds from operations. Now let's go into VNR, which, as I mentioned earlier, is somewhat of an exception, or it's more anomalous. It isn't as straightforward as Kinder Morgan was. Let me show you why. Number one, we see that there's a lot of cyclicality or inconsistency in their funds from operations. Now, funds from operations is a very close cousin to operating cash flow. Let me go down here to our operating cash flow mnemonic, check that mnemonic, if you will, and go ahead and put operating cash flows and funds from operations on the graph simultaneously. And you'll see what I mean when I say I call them kissing cousins, but they're not identical twins. You can see that operating cash flows and funds from operations are highly related metrics. So that's another method that we could have used for a premium subscriber. But for all subscribers, they can now look at simply looking at the graph based on funds from operations and then looking at it from the dividend line. Now, there's a couple of problems with Vanguard Natural Resources. Number one, if you really look at this and go to the bottom of the graph here, you'll see that there's some funny numbers. From 2007, and here the company went public, by the way, in October of 2007. From December of 2007 through December of 2008, we had this funds from operations or operating cash flows that went from $1.34 to $3.45. That's a 157% increase. Then we had 2 negative years during the Great Recession of -22 and -13, followed by a 70% up year for 2011, followed by another negative year. So you really have a lot of cyclicality, if you will, in their operating cash flows or funds from operations. So to get maybe a better picture of this, because the reason I think this picture is distorted, it's showing me 18.4% growth. And that's technically accurate if I went from $1.34 to the current level of funds from operations. But I need to really trim this number out. So the first thing I can do is I can drop this down to a 5-year graph, which allows me to trim out this huge year here and see what happens to my growth rate. Now what I find out is that I have almost no growth during this period of time. But based on a normal price to funds from operations of 7.8, there was a time when it was only, if I look down here at this graph, it was only trading at 1.7 times funds from operations at the beginning of 2008. And of course, it moved back up into line, got above that, and it's now currently tracking it pretty closely, or you could say here it's just only modestly above its funds from operations valuation. It's below the income line. And those are good things. It means this particular MLP might be undervalued with an 8.5% yield. That's a good thing, but the problem I have is I don't see a lot of consistency here, so it's really difficult how we would look at forecasting this going forward. Now, the problem is forecast graphs are built on earnings estimates because we don't get cash flow or funds from operations estimates, so we have to build those ourselves. So if I went in here and overrode this graph at the 1.4% historical growth rate over the last 5 years, 4 years plus the estimate for the year we're in, now I've got the number that I had forecast into this forecast. Now I've got the 1.4% number, and it's relatively flat. I'm not going to get any growth. The income looks like it's well protected, however, if it were to achieve that growth. And when I evaluate the dividend, I see that the dividend has been pretty secure. It's gone from $2 to $2.58. If I expand this back out to the full graph for Vanguard Natural Resources, which again is only a 7-year graph, I see that the dividend has been very consistent. However, I also see that there's a possibility that the dividend may be cut. Now, I haven't checked what the company has announced yet, but that tells me that there's some reason why the dividend might be expected to drop a little bit this year. And how I would determine that, by the way, is I'd go ahead and go into the company's website by just clicking on this button, because FastGraphs is designed to help subscribers research stocks better. And I would then go into the investment center here, and I would start looking at things like for things like presentations, where I could click on these presentations, go in, open them up, and then go through the slides that the company is showing us here and try to determine perhaps what management might be guiding us about what the future of this company is. So the whole idea here is that fast graphs are designed to help you make sense out of what you're looking at. They go beyond statistics and give you actually a picture of a company. But it's very difficult to value a company with this type of cyclicality. But at least with fast graphs, you can see how the stock is trading in relationship to how the market has normally priced it relative to its funds from operations and relative to its dividend income. You can run some projected growth rates to try to figure out what you think the future might hold. But the point is, you're not simply investing blind. But evaluating a company like Vanguard National with this much cyclicality is certainly a difficult task. This is Chuck Carnevale. Thanks for listening.